Good afternoon. This is Rick Ackerman, editor and publisher of Rick's Picks. And I did want to show you a trade that caught the low of today's big move in the E-mini S&Ps. It's a simple trick that's very easy to learn. I'm going to show you exactly how I did it. The trade began with a trading recommendation that I put out last night. This is the front page of my newsletter, Rick's Picks. And if you go down to the E-mini S&P trade, that dollar sign in front of E-mini S&P means that this trade recommendation is actionable. So last night I suggested with the E-mini up around 29.74, I said that if it didn't rise above a certain price by 10 a.m., which it did not, to look for a slump down to 29.54. That is the first place where a bounce would be logical. And I said that you could bottom fish at that price, 2954.25, with the stop loss as tight as 2952.75. Just to do the math, that's a 1.5, very tight stop loss, probably tighter than you're used to if you follow other trading services. So keep that 2954.25 number in mind as I show you a chart. The tout went out, the recommendation sometime around, it was evening. And you can see that this morning, sometime around 10:15 a.m., about 45 minutes into the session, the E-mini S&Ps came down exactly to that 29.54 where I suggested looking for support. The actual low occurred at 2953.75, exactly 2 ticks where I told my traders, subscribers to bottom fish. With that, it turns out we didn't need a 1.5 point stop loss. Even a 3-tick stop loss would have gotten us in. So the initial risk, in theory, on 5 ticks was about a little more than $60. But this trade went on. If you'd held any contracts to the top, it would have produced a gain of $2,000 per contract. As a practical matter, I did have some people in the chat room who did this trade. Let me show you one of them, a guy named Dave. Shortly after 10 in the morning, he said that the E-mini S&Ps were getting close to my number. He put an order in at 29.54, and a couple minutes later, he said, I'm long. He was in the trade. And sometime later, about actually 6 minutes later, he was out of half of it at 29.66. So that would have meant a $600 profit per contract in just 6 minutes. Not bad work if you can get it. All right, so returning to the chart, one thing I advise all of my students, many of them who come with some trading experience, is the way to get your mind in the right place to manage the risk of an ongoing trade. You'll know that if you've been in a trade and it goes against you, you get nervous, and it goes against you a little more and you get more nervous. And finally, you're so freaked that you bail out. And if you had a crystal ball, you couldn't have found a worse place to bail out. It winds up being the low tick of the day, and you're jumping out of it. And then it turns around, and of course, you would have made lots of money. Well, the best way to be in that other frame of mind where you're just sort of relaxed and you say, well, this would be a good place to take a profit. And I'm sure you've all been in this groove before. But the best way to get in that groove where things just seem to work when you're managing the risk of a trade is to take a small profit off the table early. So take a partial profit. It doesn't matter how much. In this case, the fella, Dave, who was in the trade, I think we were sort of consorting in the chat room, the trading room, and he was out of some of it at 29.66 with that $600 gain. Trust me, when you've got that kind of money in your pocket from a trade, managing the trade from that point forward will be much simpler, much easier than you might be used to. So that is it for today. I will be back at you tomorrow with another regular update. Typically, I'm updating on Tuesdays and Thursdays with some market analysis, something timely that I hope will be useful to you. So I'm going to wish you all a very pleasant good day and happy trails, happy trading.